Did you know that the cryptocurrency market is one of the most manipulated financial arenas in the world? Millions of people are diving into Bitcoin, Ethereum, NFTs, and countless altcoins, dreaming of massive profits, often without realizing the dangers that lurk beneath the hype. Imagine a market where billions of dollars move in the blink of an eye, controlled by a handful of invisible players. This is not a fictional thriller. This is the reality of crypto. The very tools and platforms that promise freedom and decentralization often conceal immense risks and hidden agendas. The .com and AMP NFT parallel the crypto market reminds many experts of the .com bubble in the late 1990s. Back then, every tech startup was hyped as the next big thing. Investors poured money blindly, often without understanding the company's fundamentals. Hundreds of startups failed, leaving investors with worthless stocks. Few years ago, NFTs mirror this pattern. People would rush into tokens or digital art, lured by hype and the fear of missing out. Rare NFTs have been sold for millions of dollars. So what do you think their current value is? Zero. The danger is amplified by social media and influencer culture. Everyone seems to be making money until the bubble bursts. People believe they are investing in something rare and valuable, but the reality is that market liquidity is low and prices can crash overnight. Hype becomes the engine of the market, just as it did during the .com boom. This is why understanding the historical parallels is crucial. Many investors repeat the mistakes of the past because they focus on short-term gains rather than systemic risks. Crypto is not an investment, but a tool for traders. A common misconception is that cryptocurrency is a long-term investment. It's not. Unlike traditional assets such as stocks, bonds, or real estate, crypto lacks intrinsic value. Holding it with the hope of going to the moon is speculation, not investing. Crypto is better suited for active trading, but even trading comes with extreme risks. The market is heavily influenced by whales, large holders controlling billions of dollars in crypto. These whales can manipulate prices at will, causing sudden spikes and crashes that wipe out small traders. Technical indicators, charts, and algorithms often fail in this market. Even seasoned traders cannot rely solely on conventional tools because the market is driven by unpredictable, large-scale moves. Pump-and-dump schemes, automated trading bots, and coordinated manipulation are rampant. Imagine trying to navigate a financial battlefield where the rules keep changing. One wrong move, one misread signal, and your capital could be gone. Leverage trading increases this risk exponentially, turning potential profits into devastating losses. This makes crypto trading highly stressful and unsuitable for most people. Even with careful strategies, traders often face losses because the system favors insiders and those with access to massive capital. The lesson? If you're considering crypto, do not treat it like a stock or safe investment. Approach it as a high-risk tool where understanding market dynamics, psychology, and manipulation is essential. The illusion of decentralization. Another widespread myth is that cryptocurrencies are decentralized. In theory, decentralization is supposed to prevent manipulation and give power to the people. But in practice, true decentralization is impossible if governments want to maintain control over money. Why? Because a fully decentralized currency would allow people to bypass traditional monetary systems. Governments rely on controlling currency to manage inflation, debt, and economic policy. If individuals could freely use a currency outside government control, they could preserve wealth, evade hidden taxes, and reduce the power of central banks. This is why crypto networks, while appearing decentralized, are often carefully structured to work within existing systems. Large exchanges, liquidity pools, and major holders exert enormous influence over market prices. Regulators can and do intervene when needed, ensuring that no currency becomes truly independent. In other words, your crypto holdings are far from immune to external forces. Decentralization is more theoretical than real, and the system may be designed to appear free while serving the strategic interests of governments and financial elites. Understanding this illusion is critical for anyone entering the market. It shows that crypto is not the financial utopia many imagine. Instead, it's a complex, manipulated environment where power is concentrated, not distributed. Crypto as a tool to eat the dollar. Now let's explore a more controversial perspective. Cryptocurrency as a mechanism to erode the value of the dollar. Every day, hundreds of billions of dollars flow through crypto markets, moving from coin to coin through complex transactions. These transfers, often involving leverage and margin trading, keep money circulating inside the crypto ecosystem. The effect: capital remains trapped, while the real-world value of traditional currency slowly diminishes. Some analysts even argue that crypto was strategically developed, possibly with involvement from intelligence agencies like the CIA, to achieve this subtle form of economic influence. This is not a theory. It's visible in the massive daily transaction volume. $100, $200 billion moves across exchanges and tokens every single day. The system encourages high-frequency trading, transfers, and leverage to maximize participation and keep money locked in, creating the illusion of liquidity while slowly impacting fiat currencies. In essence, crypto may act as a financial siphon. Money circulates endlessly within the system, with most ordinary investors exposed to risk, while larger institutions and early adopters benefit. The result is a market that appears innovative and decentralized, but may subtly serve the strategic interests of powerful actors. Trading challenges and market manipulation, even for experienced traders, navigating crypto is a nightmare. Traditional tools like RSI, MACD, or moving averages are unreliable. Prices often spike or crash unexpectedly, influenced by whales, automated bots, or coordinated transactions. Volatility is extreme. Leverage can amplify both gains and losses, sometimes wiping out accounts within minutes. Constant transfers keep money circulating, creating artificial activity and keeping markets unpredictable. Traders may believe they have control, but the system is rigged to favor those with significant capital and insider knowledge. This manipulation isn't subtle. Pump-and-dump schemes happen regularly. Social media hype can trigger sudden price surges. Exchanges and liquidity pools often amplify movements, making it nearly impossible for small traders to compete. Even careful strategies can fail when the market is dominated by unseen forces. The bottom line: crypto trading is high risk, not just due to volatility, but because the ecosystem is engineered to favor a few while exposing the majority to potential losses. Understanding this reality is crucial before committing funds. So what should you take away from this? Crypto is not a traditional investment. It's a high-risk, speculative tool. Markets are heavily manipulated by whales, automated systems, and possibly strategic institutions. Decentralization is largely an illusion. Power remains concentrated. The crypto ecosystem may be structured to trap money and gradually reduce the value of traditional currency. If you're considering crypto, approach it with caution. Do not blindly follow hype or social media trends. Technical indicators alone cannot protect you from market manipulation. Even experienced traders face extreme challenges. Ultimately, understanding the system is more important than chasing quick profits. Crypto is thrilling, but it is also a dangerous playground where only those fully aware of the risks should participate. Knowledge, caution, and critical thinking are your best defenses. Stay informed, question the narratives, and always be wary of markets that promise extraordinary returns with hidden risks. The world of crypto is exciting, but it is also a high-stakes arena designed to benefit the few at the expense of the many. If this helped you see things differently, drop a comment, and we will answer your questions. Subscribe for more honest finance content, and remember, smart money doesn't sit, it moves.